Here are the worst purchases that I ever made that caused me to go into debt.
I'm 35 years old and in $169,292.74 of debt.
What if the thing you're paying to protect your credit is actually designed to profit when you're afraid?
And it affects so many things, not just access to credit. So your ability to get a credit card, a mortgage, a reasonable car loan. Landlords use credit reports and credit scores.
Credit monitoring companies don't really make money protecting you. They make money selling you. Every alert, every warning, every urgent notification isn't just about your safety. It's about pushing you toward loans, credit cards, and financial products. Because that's where the real money is. High profit margins, specific percentages vary by company and service type. And you're not the customer, you're the lead. These companies don't just monitor your credit, they monitor your anxiety. Every little change triggers a notification designed to spike your stress and pull you back into their app. That uneasy feeling you get when something might be wrong with your finances, they've turned that into a business model. You see it all the time. Urgent new inquiry detected. Warning, changes to your credit file. Important account alert. But most of these are completely normal. A soft credit check, a routine update, something that happens every day packaged like an emergency, because urgency keeps you hooked. And the more you check, the more you start to feel like something is always wrong. So you check again and again and again until it becomes a habit, not protection, dependence. Meanwhile, this industry is exploding. Billions of dollars, not from actually stopping fraud, but from keeping people just uncomfortable enough to keep paying. Because here's what most people miss. The subscription isn't the real product. The real money starts when you're scared enough to act. Credit monitoring doesn't protect you. It reports what already happened. It's reactive, not preventative. You're paying someone to tell you after the damage is already done, after your identity is used, after accounts are opened, after the problem exists. It's like hiring a security guard who only shows up after the burglary, walks through the house, and then tells you what was stolen. And even then, they're not always on time. Alert delays can range from minutes to hours, to as long as 72 hours. 72 hours. That's 3 full days for someone to open accounts, max out credit, move money, and disappear before you even know something's wrong. But here's where it really breaks. Even the monitoring itself is incomplete.
And this error of being fundamentally misaligned has huge ramifications across the system for millions of Americans.
A Consumer Reports analysis found 34% of fraudulent accounts only showed up on one credit bureau at first, meaning if your service isn't watching all 3, there's a real chance they miss it completely when it matters most. So you think you're covered, but you're not even seeing the full picture. Because most services only monitor 1, maybe 2 bureaus, while fraud can hit any of the 3. And the industry knows this. They know the protection isn't complete, but full coverage costs more. So they sell you partial protection first, then upsell you the rest, keeping you just uncomfortable enough to keep paying. So think about what you're actually paying for. Someone to tell you what already happened. Sometimes hours later, sometimes days later. 3 days before you even know your credit is being hit. Does that actually sound like protection? Or just a delayed notification? Because once you see it, you can't unsee it. Now here's where it gets even worse. But here's where the real money starts. Not the subscription. That's the entry fee. The real money comes when you act. Every time you apply for a credit card, through their app, they get paid. Sometimes tens of dollars, sometimes hundreds, per approval. Not per month, not per user, per decision. So when you get that alert, you open the app, you start looking around. You're not just checking your credit. You've stepped into a funnel. Every notification, every warning, every urgent message has one job: get you back inside, where the offers are waiting, because they've figured something out. A calm person doesn't buy. A worried one does. When you think something might be wrong, when your credit feels at risk, you're far more likely to say yes. Yes to a new card, to improve your score. Yes to a loan, to simplify your debt. Yes to another layer of protection. And every yeah puts money in their pocket. $40, $60, $100 for a single decision. You made under pressure, and it doesn't stop there. Because you're not just a user, your data, your income, your debt, your credit profile, your behavior inside the app, all of it. becomes valuable, packaged, analyzed, and sold. Now you're not just in one system, you're in dozens, lenders, marketers, financial platforms, all competing for your next decision. This isn't protection. It's a pipeline, a lead generation machine disguised as security. But here's where it gets ugly, even with monitoring.
A Michigan-based company that helps car dealerships with financing and credit reports is working to contact nearly 6 million Americans after a data breach.
Victims spend over 100 hours fixing identity theft. 100 hours, that's weeks of your life on the phone, filing disputes, proving you didn't do something. That already happened. And that's the good scenario, because the complicated cases don't take weeks, they take years out to fully clean up. But the damage happens fast. If fraud is caught early, the average loss is around $500. Wait a few months, that jumps to $3,600. Same crime, different timing, completely different outcome. So yes, speed matters. But here's the problem. Monitoring doesn't stop anything. It just tells you after the fact. And sometimes, not even then, because while the median loss sits around $500, about 13% of victims lose over $10,000. $10,000 gone while you're paying for protection, because those alerts aren't stopping the damage, they're just documenting it as it happens. And here's the part nobody talks about.
In my credit report with a $25,000 loan that I never asked for.
Something he could have avoided if he had the option to freeze his credit.
The aftermath. Around half of identity theft victims get denied credit afterward. 40% struggle to pay their bills. 40% have trouble finding housing. Think about that. Even after you fix everything, even after the hours, the disputes, the stress, your financial life is still damaged, because this industry isn't selling protection, it's selling peace of mind. And those are not the same thing. You're paying every month not to stay safe, but to watch the damage in real time. Credit freezes are free at all 3 credit bureaus, and they do what monitoring can't. They stop fraud before it starts. When your credit is frozen, no one can open a new account in your name. Not a scammer, not a lender, no one, no delays, no alerts, no damage to react to, just block. And if you need to apply for credit, you can lift the freeze in minutes, for free. Lock it, unlock it. On your terms, that's real control. But a freeze only protects new accounts. So what about your existing ones? That's where your bank comes in, because your bank already gives you real-time alerts, not delayed, not filtered, real-time. Every transaction, every login, every dollar moving. You can see it as it happens, straight from the source. Not a third party, not a middleman. Your actual account, being monitored in real time, and you control it. Set alerts for any amount. New devices, password changes, anything that matters to you. So when something hits, you know immediately. Not later, not tomorrow, right now. That's the difference. One system tries to inform you after the damage. The other prevents it and shows you everything as it happens. One is a subscription, the other is control. So no, credit monitoring isn't worth it. Not for protection, not for prevention, not for peace of mind. Because you're not paying to stay safe, you're paying to be notified after the damage is already done. And sometimes, not even then, if you actually want to protect yourself. Freeze your credit. Set real-time alerts with your bank and cut out the middleman completely. That's what the industry doesn't advertise, because it makes them irrelevant. And if you want more breakdowns like this, where we expose what's actually worth it and what's just costing you money, make sure you're subscribed, because next we're breaking down banking fees that most people are paying without even realizing they might not be legal.